In this segment of Money Talk Radio and the Ellis Martin Report, we speak with Gwen Preston, VP of Communications for West Red Lake Gold Mines, trading as WRLG on the TSX Venture Exchange and WRLGF in the U.S. on the OTCQB. West Red Lake Gold is a publicly traded gold company that is focused on developing its flagship Madsen Mine and exploring the associated 47 square kilometer highly prospective land package in the Red Lake Gold District of Ontario, Canada. The Madsen Mine produced 2 million ounces of gold historically from high-grade mineralization. A recent restart failed when an insufficient resource model and an undercapitalized build led to low mined gold grades and high cost. West Red Lake purchased the asset in early 2023 and has been addressing those deficiencies and plans to restart this high-grade and largely built gold mine this year. The highly productive Red Lake Gold District of Northwest Ontario, Canada, has yielded over 30 million ounces of gold from high-grade zones and hosts some of the world's richest gold deposits. Gwen Preston joined West Red Lake Gold after 16 years analyzing mineral projects and mining companies from an investor perspective. Through these research efforts, including hundreds of site visits, she attained extensive knowledge of exploration, development, and mining operations within the cyclical metals market. Ms. Preston started her career writing for the Northern Miner, where she covered exploration and mining stories around the globe. From 2014 to 2024, Gwen ran the Resource Maven newsletter business, reviewing stocks and explaining the rationale behind her investment decisions to her subscribers. Gwen, welcome to the program. It's great to visit with you today. Nice to see you.
Nice to see you too. It's great to be here.
You and I go way back, I would say about 14, 15 years or so. I met you first at a conference in Palm Springs, California, I believe, and you were new to the scene, and you had a banner hanging over your table that said Resource Maven. And I'm thinking, who is the Resource Maven? I even asked you that. And then we wound up in the Yukon looking at a few gold properties just a few years ago, and that was certainly an adventure. Now, I have to ask you, you're an analyst, you're an investor, newsletter writer, you're a lecturer. You know everything that a person could possibly know about the mining sector, and after years in that side of the business, journalism, everything, you picked a company to actually work for and leave everything else behind. And I want to know the backstory about that, because good people are hard to find in our business. I mean, really, they're super hard to find, and there's many companies that are short-staffed because they can't find people like you. Why did you leave what you were doing and choose West Red Lake Gold?
It's a great question, for sure. We have had a lot of fun together over the years, Ellis, for sure. Some of those trips to Yukon were a lot of fun. We learned a lot. I'd spent a long time. I'd spent 17 years, like you say, as a journalist, I'm a researcher, an investor, a communicator, a newsletter writer in the metals and mining space. The last 10 of those I was the Resource Maven. I wrote that newsletter, and that newsletter was tracking and explaining what I was doing with my junior mining portfolio, so my subscribers could see what someone with that knowledge and network and time was doing. And in that process of spending 10 years focused on this sector, one of the big takeaways for me was that there can be great upside in the mining sector, but a lot of the upside opportunities come with a lot of risk. Like, we know that the discovery stories can be phenomenal, but they're few and far between. That's the risk, right? A lot of the discovery stories, potential discovery stories that we buy into don't play out. And so the segment that I found I kept gravitating to through experience was the developer to producer group. And it's not a big group. Because it's so hard to find a deposit and then prove that it's economic and then permit it and build it, there's not ever that many companies that are actually in the process of building mines. But those that do, those that successfully make the decision to build a mine and then put it into production, that creates like tangible reason for a company to be worth more, right? Because you're going from spending money, which is what it is to drill a deposit and do all of the economics and the engineering and the permitting and the construction. You go from spending the money to making money. That's the point, right? And so that really is sort of tangible reason for a company to be worth more. I really loved that. You still get good upside there as you re-rate from sort of 0.3 of the value of the project to 1 times the value of the project. That's the sort of developer to producer re-rate. And it happens with good reliability. It doesn't have the same sort of risk that the exploration stories had. So I kept finding myself gravitating to that. And then one of the stories that I found therein was West Red Lake Gold, which has this cool angle angle on it through buying a mine that failed only 2.5 years ago and applying expertise to fix the things that went wrong, and then therefore get sort of an accelerated developer to producer transition. I really liked that. And interestingly, the other thing you reference is it's hard to find good people. The thing that sealed the deal for me was the people here at West Red Lake. So Shane Williams, who's the president and CEO, he's a very experienced, successful mine builder. He's worked with Eldorado, he's worked with Rio Tinto and the Lundin Group and Skeena. He's done the hard yards of learning how complicated it is to build mines. And he's also a very good leader. He has attracted to him a good group of people in this company. So that really sealed the deal for me. So yes, I shut down my business and came over and started working for one company alone.
Now, you've come at this, I would say, basically as a highly educated investor, because as you said, I'm going to say it, I've said it before in this program, 90% of the junior mining stocks and companies that we see aren't going to make it. It's just the truth. And I'm probably being conservative in my estimate. So anything that's going into production, near production, or production that needs to stage out and ramp up, those are really the companies that you should look at right now in this market. I would say while gold is pushing toward $3,000 an ounce, the equities are not even close. There's such a huge gap between the equities and the price of gold right now. And when you start seeing it in mainstream news, you start seeing everyone begin to talk about the price of gold, you know that jack-in-the-box effect is going to happen any day now, any month.
Oh my goodness, it's so exciting. And it's exciting for people like you and me and those who are listening who have long been interested in gold and wondering when that disconnect was going to resolve. And I mean, the disconnect makes sense in that the gold price has done very well for the last few years, slowly, steady, some sudden jumps, and a lot of just like holding steady despite pressures that would usually have pushed it backwards, like that really intense rate hike cycle where gold held its ground. That was an unusual situation. And the reason that it all happened is because gold was being supported over the last 5+ years, not by Western investors. Usually when gold is gaining, it's because Western investors are buying. That hasn't been the case lately. It's been central banks, it's been individuals in China and in the Middle East and in India. It's been non-Western investors. And there has been a lot of buying, enough to support this gold price to now, like you say, almost $3,000. But those buyers don't buy gold stocks. They don't buy North American listed gold companies. That's not what they do. And so the gold price has been going without an audience that's also paying attention to gold stocks. But what's so exciting right now is what you say, gold is now in the mainstream. People are starting to pay attention to it in North America. And I think the gold sector is so small, it doesn't take much capital. It takes a very small percentage of capital to rotate away from index funds, tech, Nvidia, whatever it's going to be, and rotate for just hedging against all of the things that are happening now that require some hedging. It only takes a little bit of that to rotate into the gold sector to make outsized impacts. And I really think that that's what's happening now. I think we're going to get that rotation into gold equities, which have been totally lacking in any attention for a while. And I think we're going to see some really phenomenal moves in the next year or two. I'm not sure what the time frame is.
I've been telling our audience in West Palm Beach, where we broadcast not too far from Mar-a-Lago, and I guess it's the White House South now.
Yes.
That you can buy gold at a high, which it is right now. It's going to get higher. You can buy the physical gold. You can hold on to it. You can play with it. It's never a bad idea to buy gold. But what if you take that same amount of money or more or whatever you'd like to do? I'm not telling you what to do, audience, and put that into some of these really inexpensive equities in good companies right now. And let's talk about West Red Lake. You're at about, I think, 50 cents US at the moment. Where can you go potentially? What are the comparables here? And tell us about the project, the Madsen Mine.
Yes, absolutely. So the Madsen Mine is in Red Lake, Ontario, which is a really famous gold district in Canada. It's sort of right in the middle of the country. The district has produced 30 million ounces of gold from rock pulled out of the ground that averages something like 14 grams per ton, half an ounce per ton. So that's what Red Lake is. It's high grade gold veins. And that's been going on for 100 years. And so you can we have a very good history that shows that you can mine Red Lake gold successfully. The Madsen Mine contributed to that history. From the mid-30s to the early 70s, it produced 2 million ounces of gold from 9 gram per ton material, a great mine. Then in the 70s, as listeners here will know, gold wasn't worth very much. The mine had gotten deep, and so the economics didn't work anymore. So it shut down. Fine. Then fast forward to like 2014, and a junior Canadian company bought the project and decided to restart the Madsen Mine. And they they did a bunch of very good work that defined this resource, 1.7 million indicated ounces, so pretty confident ounces at a good grade at 7.5 grams per ton gold. And then they engineered and they permitted and then they rebuilt the mine, including a new process plant and everything. And they restarted the mine. Unfortunately, at the sort of near the latter part of their tenure, they did make mistakes. And this was from a team that just didn't have the kind of experience that I was just referencing that Shane, our president, has. The experience that it takes to just understand the needs of a complex underground gold mine. Red Lake has produced really successful gold. The rule of thumb to mine the gold veins of Red Lake successfully is that you have to do really tight space drilling. The gold isn't really continuous. It's not a homogeneous situation. These are veins that pinch to nothing and then swell to a really amazing gold zone and then pinch down again. You got to get lots of drill holes in there to see where the gold is, to have an accurate model of the gold. And the prior operator of the Madsen Mine, they didn't do that work. They sort of skipped that step. So when they went to mine, they didn't mine accurately. They didn't know exactly where to mine. And that was the really big trip up for them. So they ended up delivering material to the mill that graded less than half of what they expected, right? 3.5 grams per ton instead of 9. It doesn't take a mine economist to understand that if you're not delivering the gold to the mill, it's going to be hard for the mine to make the money that you expected. They made a few other mistakes too about efficiency and how things were done, but really their lack of resource model accuracy, that was the big thing. And unfortunately, it meant that mine, the Madsen Mine under that prior operator, did go into the bankruptcy proceedings. That became our opportunity because West Red Lake bought it from the company that had loaned all of the money to that prior operator. We bought it from that lending company for $6.5 million Canadian. It was a steal of a deal because this prior company had put 350 million Canadian into the project and we bought it for $6.5 million plus a royalty and 20% of our company. And that was almost 2 years ago, not quite 2 years ago. It was like 20 months ago. And we have spent the last 20 months closing that deal and then doing the work to address the things that went wrong. And now we're right on the cusp of turning this mine on again. We're currently mining the bulk sample, which is the first 10,000 tons, the first part of mining. We're mining that, we're stockpiling it, we're going to turn the mill back on. The mill is a great piece of machinery. We're going to process that bulk sample through the mill to show that our approach worked, that by doing Red Lake mining the way you need to do Red Lake mining, the Madsen Mine works. And we're going to do that those results will come out in April. And then we're going to, in the second half of the year, roll into production. We're going to be stockpiling and then putting material into the mill and be producing gold into this phenomenal gold price environment. And that's where we get to it. That's where we get to this idea that I loved this investment thesis of a company for its proximity to that developer to producer re-rate. That's what I loved so much. And we're right there. That's what I expect to happen over the next year is for the market to stop rating us as a company that's building a gold mine and start rating us as a company that's producing gold into a really strong gold environment. And if you want a proxy for how that can work, I mean, Artemis Gold, it's ARTG is the Canadian ticker symbol. Sorry, there's probably an F on the end of it or something for the American ticker symbol. I'm not totally sure. They are a company, it's a bigger project for sure, but they are the ones that most recently put a gold mine into production in Canada. Their first gold was just a couple weeks ago, and their re-rate has been really phenomenal. Their prices has multiplied as they did that developer to producer transition. So that's the investment thesis here. It doesn't hurt that the gold price is doing what it's doing. And to be honest, I mean, as a Canadian who sometimes wants or needs to buy American products, I don't love our exchange rate weakening. But as a Canadian gold mine that's selling gold, I don't mind that the Canadian gold price is incredibly strong right now because of that exchange rate. So we get even a little bit more benefit from that. So it's a really phenomenal time to be turning on a high-grade gold mine in Canada, and we are literally the only company that's doing it.
This is fascinating. It's fascinating to me because I've read your presentation before this interview, but I didn't read everything. Not everything. And while you were talking and I'm listening, I know the company that went bankrupt. I mean, we all know it. I'm not going to mention them at all. And we were looking at that time, all of us, to be potentially the next Great Bear at that time. It's like, why wouldn't this company be that? We're talking to a lot of new investors on this program, South Florida and all over the world, people that were lucky enough not to invest in these stocks in the last 2 or 3 years because they would have potentially, with 90% of their investments, lost their money. Even on the good projects, even on all the good projects, it was not a good market. But for all the reasons you mentioned and the reasons that I mentioned, all eyes are now on the equities. They're on the stocks. And if you don't do risk mitigation like you did before before you even came on board with this company, you know you're taking your chances.
Absolutely.
So it's really important to pay attention. Now, I'm curious, knowing you like I do. I mean, I've seen you out in the field. I've seen you at these conferences. We've known each other for quite a long time. You're VP of Communications. I can't believe you're not consulting in all avenues of this. What does your job entail?
I mean, what's really cool about my job is that, VP of communications seems like a limited scope, but actually to be able to communicate across the audience, so from all the way from the analysts at the investment banks through to the first-time retail mining investor, to be able to communicate effectively with accurate information to all of those people requires that I understand most things that are happening at the mine site in pretty good detail. So it actually leans on a big body of technical knowledge and ability for me to be able to keep up with everything that's happening. And then you layer on the financial side of things, understanding how the project is being funded and all of the capital markets pressures and how those work. It's a lot. This is a complicated project because it has this somewhat complicated backstory of a mine that was in operation that didn't work and now we're fixing it, and it's been a rapid process of we're going to take this thing from purchase to production in 2 years. That's very unusual in the gold space, right? And so it's a really dynamic, a really fast moving, complicated story. So I'm lucky that I have the ability, that sort of technical background to be able to understand it all. And Shane, like I say, really proven, phenomenal mine builder and operator. He's good at telling the story for sure, but it turns out we're building a mine and he's fairly busy doing that as well. So it's been really lovely to be able to sort of share being the face of the company, because we've got to all play to our strengths.
When are you going into production? And, you can give us a range here, because I know it's not an exact science when it comes to the actual start of production.
Absolutely. So we will produce gold in March from the bulk sample, which is really, you can think of the first bit of production. And we're doing the bulk sample so that we can understand exactly the best approaches to mining in the different kinds of environments that are underground at the Madsen Mine, right? Areas that haven't been mined, areas adjacent to places that have been mined that are empty, or places that have been mined that are backfilled. There's a big narrower veins, wider veins. Let's practice what we're doing before we do it at full production pace. That's what the test mining process is about. Test mining process also produces these lovely bulk samples that have gold in them, and we will process those in our plant in March and produce our first gold from the bulk sample at that time. Then the mining will just transition right into building up the stockpile, and then once we have a stockpile of a size that we like, we'll start putting material into the mill. So think of it in the second half of the year, we're going to just increase the throughput through the mill. We're going to ramp it up so that we're at what we would think of as the full production for this mine by the end of the year. But we're producing gold. We're producing our first gold from the bulk sample in March, and then we're going to be producing gold regularly in small amounts and then increasing all through the second half of the year.
Gwen, you've invested your own money in West Red Lake, haven't you?
I certainly have. So I invested when the deal first came out, and I managed to do a site visit to go down there, and that's when I really understood what had gone wrong and that the mistakes were fixable. So I invested at that time, and I had invested in another private placement before it became an opportunity to come over and work, and now I invested on a reasonably regular basis as an insider. So yeah, I have a good position here in this company.
Gwen, it's always a pleasure to catch up with you and chat with you. I look forward to seeing you soon, probably in Toronto, and of course during our next interview. Thank you so much for joining me today on the program. All the best.
Thank you, Ellis. It's lovely to see you.
I've been speaking with Gwen Preston, Vice President of Communications for West Red Lake Gold Mines, trading as WRLG on the TSX Venture Exchange and WRLGF in the U.S. on the OTCQB. This is Money Talk Radio and the Ellis Martin Report.